Hey, good morning, everybody. It's Andy O'Fee, the Yankee closer from Crump Community Mortgage. It is Monday, March the 8th. And the question at hand that I've been getting multiple phone calls this morning on are regarding interest rates again, and will they continue their relentless rise higher? And last week we had some very interesting data. We had Fed Powell speech also, and he had made some comments in regards to the economy is doing just fine. And Friday's employment number might just be enforcing that. And we're starting to see that kind of flow back into the market, top it off the $1.9 trillion stimulus package, which is going to go through this week. And the amount of money that people are going to be getting to use have now caused the stock market to go up almost 500 points this morning, putting more pressure on 10-year Treasury yields. So let's take a look at some interesting charts I want to share with you. So as you can see, rising rates are definitely having an effect on mortgage applications and refi applications. So they are definitely slowing things down a little bit as people have become a little bit concerned about rates when they start blossoming over that 3% threshold, which is where they are now easily. So as you can see, we can also track 10-year Treasury yields in blue. When they start to rise, you can also kind of follow the S&P also start to rebound, and that's through March of 2021 back until the year of 2001. So pretty interesting data when it comes to reactions to the stock market. This is, I think, is the most relevant chart because for those of you that are looking for a relief, this is a 10-year Treasury yield graph all the way back past before 1990, all the way down until our current standing. And you can see if we're making any move, you can make the argument that maybe we'll get back up here and test this 2% number before we potentially can come back down. Now, if we see any type of correction in stocks, we all know that money flows out of the stock market and back into the bond market for a safe haven. At this point, though, it's too difficult to pick that. We are at a significant level on the 10-year Treasury right now. I'm going to tell people to kind of hold in there before they start locking. This is the first time I've called for people to float, given the number of days that we've experienced a move higher across the board in rates and in Treasury yields. So we're at a significant level on the 10-year note. We touched it overnight at 1.60. I'm going to check to see if it breaks through that. I would hold off to do any locks today before we see any more patterns of it moving above that. In the meantime, enjoy your wealth effect from the rising stock market. And a lot of people now, for what I'm hearing, are taking their stimulus money and they're putting it into the stock market. So it could be a relevant cause as to why the market is up so much again. And we'll see what happens when those checks start clearing. Hopefully they start using them for down payments on new houses. If you have any questions, please don't hesitate to give me a call. Monday, March the 8th, here we go. Let's keep our eye on rates as they continue to move higher, hopefully staggering here for a little bit. Bye-bye.